Hi, guys, and welcome to the 22nd episode of the weekly trading wrap up, where we talk about the week in markets from a trader's perspective, what to focus on and what to ignore. So let's begin. As usual, we will be starting with the S&P 500 daily chart. The arrow denotes Monday, this candle, then Tuesday, Wednesday, and Thursday. It's a short week. Happy Easter to all my fellow Christians out there. So this will be a quick video to discuss what went on this week. As usual, first we talk about the technical picture. As you can see, we are still bearish. Okay, we'll look at the moving averages. We are still below the 200, which is this one in blue, and this line in red is the 50, and as predicted, it crossed below. So now we have a death cross. Oh no. It's a very lagging indicator. So we have a death cross. Bearish, we're still in a downtrend in the short term. However, if you look at longer term, you can go all the way back, and you can see this trend line that I drew, this long-term trend line from 2020 bottom, was touched last week or the week before, I think, held. So we're still in a bullish uptrend, but this is a bearish chart. Okay. You can tell also that it's also downward sloping. So this is very cautionary. We should be very, very careful. Okay. We also have fear and greed and extreme fear. I think we've been in extreme fear for a month now. I mean, how do people take it? Extreme fear for a month? I mean, go to fear for at least and then come back. Nope. Extreme fear. People are really, really scared about Trump's. Some people are very, very scared about Trump's trade war. Okay, so we have that, and the AAII sentiment came in another week of extreme bearishness. It was 6 weeks, 7 weeks at least. So at least 1 to 2 months of extreme fear out there in the markets. So everything is baked into the cake, I think, of what could happen in terms of terrible outcomes. Okay, so far in the short term, I think in the short term, because of this extreme sentiment, we bounce. Okay, we can form a higher low here, and then bounce higher. Okay, it doesn't mean after that I don't know, because this is we don't know what's going to happen with Trump. Again, technically speaking, this is just and macro speaking, actually, this is just a one issue market right now. It's Trump and his tariff war. Anything good happens, boom, pop. Anything bad happens, down. I mean, this market this week, it looks like nothing, but in reality, we went from a high of 540 something on the SPY down to a low of 520. So that's like I don't know, 3% move is normal, I guess. A 3% move in any other market would be huge, but now it's nothing in this market because volatility is super high. As you can see from the VIX, above 30 still, well, 29. Still, the whole week we're in the 30 range. Still, that's historically extremely high, okay? And this is reflective of everything that is priced based on volatility, i.e. options. So option prices are pretty high still, okay? So technical picture, bearish still, and we will see going forward. Second, we talked about the macro. Okay, there wasn't a lot of macro this week; it's very thin. But on Friday, we got some. Thursday, we had some interesting macro prints. We had the initial claims, which came in at a paltry 215. Nothing to see here. Okay, the whole narrative has been we're getting into a massive recession, super inflationary tariffs. I mean, if we get into a recession, the tariff inflation will be way overshadowed by the deflationary recession. But I don't know why people think there's going to be inflation. But so far, jobless claims are holding in our very low range. We would expect this to be higher if there's going to be an imminent recession happening. But I don't know. Maybe we're already in a recession. Doesn't seem to be by these claims, but we can't get in the way of people's fears, destroying a good, a good reality. And the other thing that came out is building permits, and building permits increased to 1.48 from 1.46 million. So it's building permits are people that want to build. They're buying new houses or permitting for them. And you can see it's still within this range that we said. Nothing to worry about. You have to worry when they start going down in the like sub 1 million range. Even 400, 500,000 would be very, very scary if you can go even further. So really, there's nothing to see here in terms of the macro that we generally look at, which is building permits and initial claims are still doing fine, nothing crazy. The only big macro that came out this week, was when Trump started talking. Not Trump, excuse me, Powell. Powell had a meeting, not a meeting, but some kind of like conference to talk about the economy. And generally in these conferences, he either refuses to talk about economic impacts, or he talks about what the Fed is going to do and the Fed's outlook on Fed policy specifically. But what he never has done, and this is a first, is that he talked about Trump's policies and their effect on the economy. He also talked a lot about the fiscal situation of the U.S. Government. Specifically talked about how Medicare, Medicaid are, and all these entitlement programs are unsustainable going forward. And this is a very serious issue. So he directly threw his hat into the ring and started criticizing the problems outside of the Fed's purview. And guess what? Trump didn't like that. So Trump wants him fired. Trump doesn't like him, and Trump is looking to replace him. So you have even more uncertainty and conflict going on, which of course, adds to the craziness and the fear in the market. Okay? So in terms of macro, that's what we have going on. The most important of which, like, we have good news in terms of the macro that we generally look at, but bad news in terms of Powell coming in and, like, quote unquote, if you want to say, it's sabotaging the Trump agenda. But he really said nothing new. Like, we already knew this about the economy and our huge debt position and huge deficits going forward, et cetera, and our unsustainable entitlements. But to hear that from a Fed chair is very unique. Okay, so that should be noted going forward. Okay, so that's about it for the technicals and for the macro. So let's go into the other section where we talk about things that interested me this week. Let's clean this up a bit. Okay, so one of the things that was mentioned on Monday coming in was that China is going to limit rare earth element shipments from China. Okay, this is a big deal because rare earths are, well, they're not very rare, despite their name, but the manufacturing process and the mining process of rare earths is very dirty. Okay, let's look at some rare earth companies. One of them is MP Materials. That's the big boy on the group. Okay, so this is what happened this week. Okay, Monday, Tuesday went like very volatile, but as you can see, well, before we get into that, let me finish about rare earths. The mining of which and the processing and refining of rare earths are very dirty, very, it increases, there's a high radioactivity involved with them. So you have to be very, very careful. It's hazardous type of work, and it destroys the environment. It's very, very bad, quote unquote, to mine, but it's necessary for everything. All electronics, smartphones, computers require rare earths, and China, because it's so dirty and disgusting, maybe disgusting is too harsh of a word, but because it's a very dirty process, Western miners don't, Western governments have limited it in their jurisdictions, and China has taken up that slack. So China is predominantly controls like 90% of the market of REEs, rare earth elements, both mining and refining. So if it chooses to stop rare earth exports, it's going to really hurt the market. So you have these companies on Monday when she announced that, companies like MP Ripping. Okay, this is, I don't know if you can see it. Let's go. This is Monday. No, I don't to the up arrow. This candle is Monday, so Monday started ripping. But then Tuesday, give it back. Monday rip, give it back. So the market is uncertain whether she's actually going to do it, or if it's just a threat. But you have these pumps in rare earth element stocks. This is the big, but this is like a $3-4 billion market cap stock. There are others like this one, Corp, which is a smaller company. This is like 150 million market cap. So this one moved. See, this is Monday. Okay. For this stock, it kept ripping Monday, Tuesday, Wednesday, big rip, but then all the way down again. Went from like $2 to $4, like doubled, and then got cut in half on Friday. So this might be the one that you might want to play if you believe this. However, I just treat this, because it just comes out of the blue and you have no idea what's going to happen. You should be buying it the first day and then getting out the next day. It should be treated as a short-term trade and not a really fundamental long at this stage, okay? If she decides to go all in on this, then you could, trust me, you'll have time. You'll miss the beginning, but you'll get into the meat of the move. But also what I wanted to mention is that you don't want to invest in this industry. It is a terrible industry. Look at it. Going back, I mean, we're at lows. Okay, this is NB, Neocorp Power, Neocorp Development. Sorry, this is not a good business to be in. Okay, so you want to treat this as a trade and use technical entries. For example, that first day on Monday, you saw the volume was huge compared to the past. You should be in on Monday, and then maybe get out the next day. Okay, because you have a high volume breakout, if you will, from a consolidation period. But don't marry these trades. This is not, fundamentally, you don't want to be in the stocks. This is just an event-driven short-term trade, if you ever want to look at it. Okay. Another one is UUUU, which is Energy Fuels. That's a uranium company, but as a side hustle, it has rare earth elements that it on its properties. So as you can see, it's doing well because of uranium, but this rare earth thing pumped it up, and it actually finished higher on the day. This was Monday right here. So it actually finished from like $4 to made a dollar, 25% return is not too shabby, okay? But again, it should be treated as a short-term trade if you're playing it for the rare earth element angle, okay? So that's it for the rare earth trade, if you will. Again, event-driven. The other thing I noticed is that NVDA got smoked, okay, because Trump limited exports of the H2 chip, which is used for a lot of the computer stuff, AI, not AI per se, but maybe graphics related type stuff, anything that requires a high output, power output. So it went down. So, but if you look, I just want to make a commentary on the, not just NVIDIA per se, but on the semiconductor sector as a whole. As you can see, SMH is the semiconductor index, and it's been going down this whole time. 2025 down, okay? And as go the semiconductors, so goes the market, generally speaking, okay? So it's a high levered play on the market, and it's getting killed, okay? So especially since you have China maybe going to war with Taiwan as well, which is a lot of the semiconductors are being made there, and you have to sort of diversify the supply chain by going somewhere else to produce them. Eventually, you can't just rely on one supplier. You see this is a barometer of the health of the market. It's bearish, the market's going to be bearish. So if this, you have to keep an eye on the semiconductors because they're like we said, the barometer. And if the market starts going up again, these guys will catch a bid for sure. This is a high levered play on if you expect a bounce in the SPY, maybe you're going to buy, maybe the semiconductors are a better risk reward. Okay, like if I think the SPY is going to hit a higher low, which I do, and then rebound a bit before going down again, you want to be in high levered market plays like semiconductors, okay? Another thing that I noticed, that we've noticed, are we always look at rates right now. We always look at, because we're in a new paradigm, we're in a global economic order shift, the NWO, New World Order right now, is you have to look at interest rates and the US 10-year specifically. However, and as you can see, it dropped. So even if like market participants are selling it because of uncertainty, and it's not really a safe haven given the tariff war, specifically inflation due to tariffs. If you believe in that narrative, there are other forces at work, okay? And this month's 20-year auction, so if you look at the 10-year, but which is a similar pattern to the US 20-year, you can see. This is the US 20-year rate. It too went down because the 20-year auction was well received. Massive buyers stopped through. It means that the rate was was lower than the when issued rate. Like the rate what they were expecting right before the auction was higher than what the rate that they actually got in the auction, which means that there was more demand, especially from foreigners. So we mentioned in the past WTW episode that there are competing forces for these rates, these bonds, these treasuries, because a lot of foreign countries have issued debt, and companies have issued debt in US dollars, and they require US dollars to pay that debt back. So there will always be some kind of bid in that sense from countries that have high US dollar denominated debt. So you have one factor in yields is demand from foreigners for their US dollar denominated debt in order to pay it back. And the other factor is people dumping their treasuries because they fear a tariff war and higher yields due to that. So you have these competing forces. And this week, the yield went down. So the TLT is the mirror image of the US 20-year. So the TLT went up. But as you can see, TLT, the 20-year bond ETF, is still at lows, which means that we're still relatively near the highs. If you see the US 20-year yield, we are near highs, okay? I'm just looking at this short-term down move, okay? So people are still afraid. Rates are still relatively high, okay? But TLT, that's why it's so dangerous to play TLT, because there's so many factors affecting rates, especially in this environment where TLT should have been ripping in any other pre-tariff war, Trump tariff war scenario, okay? Like you would see the TLT up much higher if a market is selling off big. If a market drops 15%, this thing should be up a lot more, okay? But we're in a different paradigm. So even though the short-term blip, we still might have downward pressure on TLT and upward, and maybe rates will stay higher. Longer-term rates will stay higher than we think. So this is why I don't like playing TLT and rates directly in this sense. There are better ways to play this market. This new paradigm, we know it's going to be, you know what I like. Hint, hint, gold and some precious metals. Maybe silver, maybe copper too. Look, I mean, copper should be tanking. But copper ripped this week. Still at highs. This was the first initial drop from when markets tanked 15% in 2-3 days. And look, it's being bid. Why is the copper being bid when there's going to be a recession? Is it maybe countries like, I don't know, China are stockpiling strategic minerals that they require in the future? Could be. That's what I think. I mean, we shouldn't see copper up if the market's going to be in a recession. That's all I'm saying. So that ties into what I was talking about with TLT and yields. Okay, so this is a very dangerous thing to play directly. There are other ways to play this NWO, the New World Order paradigm. Okay, yields and TLT, I wouldn't touch it. There's too many things happening with it. I don't know if it's going to go, which one of the forces is going to win over the other, although I have my suspicions. But I do know what's going to win in other things. Like, I'm pretty sure gold is always going to have a bid going forward because of uncertainty. So another thing that I'd like to mention before departing is Bitcoin. Okay. Nothing there. As the market went down 3%, Bitcoin flat. Bitcoin for the past 2 weeks, this is the beginning of the week, this red arrow, has held. Okay, so this is forming a consolidation period. This might be a good time to enter Bitcoin. Okay, maybe through any proxy that you want. I bought some Bitcoin miners to do it because I thought there was a better risk reward going forward. If Bitcoin goes up, the miner should have a bid. However, if we saw that the VIX is around 30, so it's very, very high. So buying options might not be the case right now. Even though Bitcoin is sort of flat, the options might be expensive. Let's see here. could check this out fairly quickly here. Yeah, if you look at, I'm looking at options for the Fidelity Wise Bitcoin Trust, FBTC. It's mirroring. And yeah, if you look at the May, which is just 1 month off, at the money, the 75 calls are trading around 360, 365. So I like to have a 4-to-1 risk reward ratio when I entering a trade. So by May here, do you think it's going to go up by 12 bucks, 14 bucks, let's say, from 75? Will it go to 85, 88 in May? That would be a super spike. Okay. That is like, it might go to 85, but that would be a super spike. That means the markets are ripping again. Will that happen in 1 month? I don't know. And if you look at the June calls, 75 calls are like $6. So 24, 6 times 4 is 24, 24.75. Will it get to 100 by June? Around here? Will it go to new highs by June? Tough. This is why option prices are so high. It's tough to play it in that way. Okay, so that's why I bought the miners. They're a better risk reward than doing this directly. So my thoughts on Bitcoin are that I am bullish if the market goes up, which I think it will. So this might be ripping, but I wouldn't use options on Bitcoin and its proxies. Even the Grayscale Bitcoin Trust. It's the same chart. Grayscale Bitcoin. It's the same chart. You'll probably get the same effects as FBTC. Okay, so you have to play it in alternative ways, but I do think the Bitcoin chart is very constructive, very constructive. If this happens if we have another sideways consolidation for another week, maybe we can get the option prices to come down because now they're too expensive. Okay, so those are my thoughts for this week. Let's hope we get more information on this trade war next week. What will Trump do? Will he try to fire Powell? Who knows? So in the meantime, happy Easter, everyone, and I'll see you next week.